Hi everyone, a massive welcome to today's Friday Roundup. Always enjoy these sessions where we look back in the week that was and see what is shaping crypto today. I'm going to crack straight in because we have some big ticket news items which I want to cover with you right away. Just some bite-sized topics which are really fascinating to me right now. So Pierre Rochard is VP of Research at Riot Blockchain. He released this incredible statistic which is available to anyone if you have Glassnode. The statistical analysis platform for on-chain data. He says that the Bitcoin network settled $2 trillion worth of Bitcoin in July. So that is 1 month of transactions only. All-time high was 8 trillion last November. Those are incredible numbers. When you consider, what Visa does and MasterCard does, it's absolutely up there. It is huge numbers. So we are seeing the Bitcoin blockchain, the Bitcoin network being used for those serious volumes. So it is beginning to become that mainstream macro institutional asset which people are using to transmit some serious value. So I really wanted to highlight that. If you hear anyone say that it's not being used, or we're in a bear market, it's dead, it's just absolute rubbish if you look at the fundamental data underneath the market. So he goes on to say, over the past 12 months, the network settled a sum total of $62 trillion worth of Bitcoin. That's 3x more than the United States GDP, essentially the income of the country. Absolutely incredible. And there's a great graph there that shows you value created total and Glassnode. So I wanted just to bring that up to show you that Bitcoin is absolutely not dead. In fact, fundamentally, it has never been stronger. So as always, be the sheepdog and not the sheep, because the media is telling you one narrative, one thing, when as investors, especially in crypto, you need to dive into the nuts and bolts underneath. And it's something we do really encourage you to do in our course with your fundamental research analysis. So I wanted to bring you on to the next news. Now, we did cover it last week, but there's more information coming out, and it is just so significant for the industry, for the space, and also as investors. We want to see that it's continuously growing and being adopted by huge funds, because at the end of the day, if we want to see our investment grow, if we're an investor in Bitcoin, whether you are an investor for the gains or you're an investor for the ethos or a bit of both, to see Bitcoin rise above 69,000 to go to 100,000, go to 200,000, to go even higher, we really need to see these big funds come in. We need to see better regulation and just to see that growth move forward. There's a lot of dominoes that need to fall, because for us to get to those kind of levels, we need some serious capital to move into this market, and that capital belongs in fixed income markets. This capital belongs with these big hedge funds. So just to recap, BlackRock, I believe, has around $13 trillion of assets under management. So they hold those assets for large institutional investors or high net worth investors. So people trust BlackRock. We also know BlackRock's reputation, especially in the US political sphere. They carry a lot of favor, and the more I guess tinfoil hat people will probably point to the fact that a lot of what BlackRock wants on Wall Street, BlackRock gets politically. So there's a lot of lobbying going on behind the scenes, and I'm not sure that's even a conspiracy theory. I think it's fairly well known and thought of. So let me get straight into this. So BlackRock launches a private trust offering direct Bitcoin exposure. So they're going really hard into Bitcoin. Now, keep this in mind that a lot of these funds say one thing publicly, but do another thing behind the scenes. So previously, BlackRock have really not liked Bitcoin outwardly in the media. They've come out and said, we don't like Bitcoin. We're very questionable of its energy usage, etc. We're not a big fan of crypto. But that narrative does change. Same as JP Morgan, they used to call it a Ponzi and all that, and now they're really into it. Same with a lot of other big banks, but they say it publicly, but behind the scenes they're doing something completely different, setting themselves up, building the foundation. And when they're happy with their position, when they're happy with the product they're offering their clients or about to offer their clients, then they come out in the public and be very positive about it to help push the price higher, to help a bit of confidence in the market, to help their clients as well. So just keep that in mind. But I just wanted to bring this up and just read this to you. So BlackRock, again, investment manager BlackRock has launched a private trust focused on Bitcoin. It will be its first trust offering direct Bitcoin exposure. So that is massive news. And this is from BlackRock itself. So despite the steep downturn in the digital asset market, we are still seeing substantial interest from some institutional clients in how to efficiently and cost effectively access these assets using our technology and product capabilities. So BlackRock would not be offering or being so bullish on Bitcoin and crypto if their clients were not banging down the door, requesting exposure in their portfolios to this highly volatile asset class. Yes. However, you need to remember that volatility cuts both ways. And if you're in fixed income, which is actually not even beating inflation, and then you look over and see Bitcoin at 150% average gains per year over its lifespan, you start to question whether your portfolio might need some exposure to this higher risk asset class. Yes, but if it's a small denomination, 1% or less, suddenly you've got a very good asymmetric risk bet on your balance sheet if this asset class is going to expand over the next, say, 5 to 10 years, which we all strongly believe is the case here at CCI. So just further as well, on August 4th, BlackRock announced a deal with crypto exchange Coinbase to offer institutional investors access to crypto, beginning with Bitcoin. So that is a key distinction. They're starting with Bitcoin, and then down the road, they will look at crypto as long as their clients are demanding it. Some really interesting points just in that as well. They're going through Coinbase. That is the institutional platform in the United States. Every major corporation, fund and company goes through Coinbase to get their Bitcoin, their crypto stored and moved off exchange into custody. So there's a bit of FUD out there about Coinbase, how they've cut jobs, etc. Yeah, they're not doing too well on the retail side of things, but as a company, in terms of what they offer for institutional clients and funds, they are very, very healthy and aren't going anywhere. So very, very interesting. It's just absolutely crazy what is happening behind the scenes in crypto. When you look at the big players, the smart money are positioning for this space for the next big run. What are you doing? Are you positioning, or are you listening to the media, which is very knee-jerk, clickbait, looking for a fast reaction? And nothing sells better than bashing crypto over the head when it's down. But we have to remember, stocks are down. Everything else is down as well. So keep everything else in perspective. This asset class has a uncanny ability of bouncing back as soon as risk is back on the menu, which we think is relatively soon. Okay, the Ethereum merge is one of the biggest hot ticket items that people are talking about, and we believe it's a huge bullish catalyst. We're also going to be doing a bit of a deep dive on this in our monthly newsletter at the end of the month, so don't forget to tune into that. If you're not a subscriber, absolutely do it. So the Ethereum merge is on track as Goerli test merge successful finalized. Now, I don't know if I've said that right. You can say it right. I'm not sure, but there's been a lot of scuttlebutt over the years, and very much verified and correct, is that Ethereum over the years, moving to Ethereum 2.0 and into this merge, has been constantly pushed back and delayed. So it's easy to get skeptical that this merge might not happen on schedule, be pushed back again, but it looks like it is going ahead. So mid-September is the area of time that we're looking at for Ethereum to pivot to proof of stake. So Goerli was the last remaining testnet scheduled to undergo the merge, officially becoming a proof of stake blockchain. The Goerli, I'm going to try saying it differently there, testnet merge has been finalized without any major issues today, suggesting there'll be no delays to the tentative Ethereum merge date for September the 19th. So again, we'll cover this in the newsletter about what it offers, but it's pretty incredible what could happen. I mean, the dynamics of the actual token itself for Ethereum, it's almost like a triple halving as the miners get essentially shut off, and note that inflation rate hitting the market is cut by about 90%. So we do expect Ethereum to have a bit of a bump here. It's also a very interesting dynamic in that what happens to a lot of these industrial sized proof of work miners that currently mine Ethereum. They're obviously not happy at all that the move to proof of stake is basically cutting their business model completely. They no longer can make money in the current form. They own a lot of equipment, a lot of miners, potentially factories, and they have they can't just sell all their equipment unless they can pivot over to Bitcoin. It's very fascinating to see whether we might have two networks shoot off, one that remains proof of work and one that goes proof of stake. There is the opportunity potentially that you might be able to get an airdrop of a brand new Ethereum token if you own Ethereum and suddenly get twice as much Ethereum off 2 different networks. Now that's going a bit deeper. Again, I'll go into that in our newsletter, but some very interesting dynamics at play as we head into the merge, but no doubt a bullish catalyst for Ethereum and also layer 2. So I'll leave that with you. All right, and this is what I want to finish on, because killing your darlings or hero worship is a huge problem in crypto. And if you're an uneducated investor coming into this space, you tend to go on Twitter, you tend to go on YouTube, and you tend to find personalities that tell you about cryptos. They get very attached to it. Often behind the scenes, they're being paid by a lot of these cryptocurrencies as well to really pump it up. And meanwhile, as their audience is pumping the crypto up, they're selling it behind the scenes and rinse, repeat. I'm not going to put Mark Cuban in that bracket as such. However, he's a billionaire. He carries a lot of weight on Twitter. He's got a big voice. He was on Shark Tank in the US. And he's been pumping Doge like crazy during the bull market. You know, Doge got haircut and wrecked a lot of people, including Elon Musk was doing the same thing. So these billionaires really don't care. They have a lot of disposable income. They can afford to take losses and take large risk bets, but a lot of people can't. So you have to be so careful if you're taking investment advice from, I'm just going to quote, hero worship or big personalities. So be very careful. He also lost a ton of money on DeFi when he didn't even understand the risks. But again, he can afford to lose money in high risk, high reward bets. Now, this is interesting because Mark Cuban, so he's the owner of the Mavericks, he's in hot water over Voyager Ponzi scheme. So Voyager, if you've been watching our episodes previously, like Celsius, was a lending platform where people staked their cryptocurrencies, Bitcoin, Ethereum, and whatnot, and they'd earn a yield. Now, Voyager went under through a lot of that, a lot of those capitulations that we saw through Three Arrows Capital. Now, Mark Cuban was telling his audience that Voyager was essentially risk-free. And a lot of the investors that followed his advice, went on Voyager and used it, lost all their money, lost their Bitcoin, their Ethereum. And now they're suing Mark Cuban, what's that for? The class action lawsuit alleges that Cuban's promotion of now bankrupt crypto firm Voyager cost investors $5 billion. So, you know, they want to recoup their funds and they're taking it out on Mark Cuban. I'm not sure that's fair. I can see the angle that people are very upset, very angry that they've lost their money. But again, and it's something we do cover in our course, you need to get educated. You need to take personal financial responsibility for your own decisions. So when you're moving your money into this market, you need to know beforehand exactly what you're doing. You need to know the risks. And at the end of the day, it's on you. If you're following these personalities, if you've got hero worship, if you're investing everything you have in a Doge because Elon Musk said so, you know, you could down the road face some pretty hard decisions where you've lost a lot of money, or you didn't understand the risks, you didn't know when to get in and out, you didn't know when to take profits. There's so much in that, and it puts new investors in a really tough place. And we saw so many investors get wrecked over this little period we've seen recently. Look, these cycles absolutely repeat through these retail manias. I saw it in 2017 through the ICO mania, so the last crypto bull market. We saw it in 21 as well. We will see it again. Gains bring people to this space. And if you're looking to get this market, if you haven't already gotten into this market, you need to do it right from the get-go and understand what you're getting into, because at the end of the day, it is all on you. You can blame a billionaire at the end of the day, but it's your money, your capital. You need to know what you're getting into before you even buy any cryptocurrency. So with that, guys, I hope you've enjoyed my Friday roundup. I'm going to leave it there. Have a wonderful weekend, and we'll catch you on Monday for our Monday market update. Ta, bye.